Welcome back. The stock of the moment on the downside is All Cargo Logistics. There was a swift, decline in the stock price, primarily on account of the weakness that we've seen in their third quarter performance, led largely by a decline in freight rates, as a result of which the company's EBITDA has fallen by almost 47%, and we've seen the net profit fall a lot more as well. We have with us Ravi Jakar, who's the Chief Strategy Officer at All Cargo Logistics, joining in to tell us more. Ravi, thanks a lot for joining in. If you could first clarify a few details. One, what were the volumes that you handled during the quarter? How do they compare year over year? And secondly, what was the quantum decline in ocean freight rates during this quarter? Where do they stand at now? What can we expect going forward?
Yeah, thanks. It's always a pleasure to be in your show. First of all, let me clarify that the percentage comparisons which are being made are perhaps a little misplaced, because when you look at the quarter-on-quarter comparisons, we have received the demerger order which has been uploaded on the NCLT website, and therefore we were obligated to show as continuing and discontinuing businesses, which I believe has led to some confusion on the numbers. So to respond to you on the volume on a year-on-year basis is flat. The market has overall degrown, but we have expanded the market share, and therefore the market, the volume for us for NCL and FCL, which is the key businesses, remains flat year on year. On a quarter-on-quarter basis, we have seen a decline of about 2%, 3% in FCL, and about 7% in NCL, both far below the market decline. As we have expanded the market share, and for the first time, we now hold 15% of the global LCL market share. Quickly to comment on the EBITDA, the best way to look at would be to look at the combined EBITDA, which is as the companies get demerged, because it's a mirror demerger. So as the companies get demerged, the continuing company, All Cargo Logistics, would have the international supply chain, express and contract logistics business. These three businesses put together for this quarter 3 FY23, EBITDA is about 268 crores. And if you actually add the EBITDA for the other discontinuing businesses, which are for the like-to-like comparison, the EBITDA number would actually be about 350 crores. So that's the key number. I think there's been a little bit of confusion with.
So that's still a 30% decline, Ravi. That's still a 30% decline, right? And comparable top line, what would it be? I mean, you've reported 4,100 versus 5,600. It's a decline of 27%. Comparable for the demerger, what would these numbers be? Because right now, the numbers that we have reported, as per you, 27% decline in the revenue, 47% decline in the EBITDA, 62% decline in the net profit. As per you, if you do not demerge the businesses, what is the comparable number? Can you clarify?
Yeah, sure. So if you look at the comparable number for the continuing business, which is what you provided as well, the comparable number is about 5,078 crores, has come down to about 4,099 crores, which means that we're talking about a decline of about 979 crores. It is important to note that a large part of our revenue is ocean freight, which is largely a pass-through cost on the largest LCL business. So if you look at the operating expense, while the operating revenue came down by 979 crores, operating expense also came down by almost 900 crores. So it's almost a pass-through impact on the LCL. There is some partial impact on the FCL business. So data is only about 79, 80 odd crores. So that's the key thing to note here. And the comparison has to be on a like-to-like basis, not with the overall consolidated and the continuing business, because this only represents a part of the business. So this is the way to look at this. Revenues have come down because the ocean freight rates have corrected. At the gross profit level, the impact is much lesser, because the operating cost is also almost in the similar proportion come down.
Okay, all right, Ravi. So one crucial clarification that you're giving us is the volumes are flat, instead of a decline, degrowth on a like-to-like basis. So that's important. The street was fearing that. But let's get a couple of numbers out of the way. What's the sustainable quarterly run rate for the international supply chain business? Can you do 5,000 crores per quarter? Point number one. And point number two, on a like-to-like basis, FY24, what kind of a revenue growth and EBITDA can you guide us? Go ahead.
Yeah, so I would say that we will not be able to share the future guidance on exact specifics, but what I can say is that the best would be to look at the gross profit, because revenue, as I mentioned, has the ocean freight component, which is mostly passed through. From a comprehensive performance perspective, expect January and February, because the China lockdown and all only eased after the Chinese New Year. So expect January to be a subdued month in line with the current quarter. And from Feb mid onwards, expect a pickup in trade volumes. From a market positioning perspective, we are absolutely well placed. We have been growing market share. So that is something which is very, very comforting. We would continue to gain the market share, and therefore as the volumes bounce back in the global trade, which we expect that they've already started showing trends from mid-February onwards, the volume should start picking up, and there's a multiplier impact. So I would say that there could be somewhat sluggishness in the Jan to March quarter, and from April onwards, expect the growth to rebound to earlier levels in terms of the getting closer to those numbers on the bottom line. On the top line, of course, the revenue would be impacted by what the operating freight rates look like.
And the FY26 target of 25 to 30,000 crores is still intact. That's guiding you, right? With 9 to 10% margins.
Absolutely.
All right. No, just a final question.
What's intact?
Right. What's the debt on your books right now? I mean, the last quarter was close to around 1,400 odd crores. You have plans to repay that. What's it at right now?
Yeah, so because of the strong operating cash flows and the long-pending Blackstone transaction, which is now consummated, I'm glad to share that on a consolidated net basis, our debt as of 31st December was about 130 crores. After December, we have signed off the Blackstone transaction, which has taken away debt of about 285 crores and also brought in cash of about 120 crores. So as we speak today, we are sitting on cash positive. There is absolutely no net consolidated debt in the company. And we have enough cash flows to even take care of the other acquisitions, which we have already announced and are lined up, such as the acquisition of stake in Gati KWE. So even if you look at the 31st March ending number, we would have completed all the pending acquisitions and would still be on a consolidated basis, net debt would be zero. So we are very strongly placed on that. Yeah.
All right, Ravi, thank you so much for joining in and giving us a quick take on these numbers. We would have loved to speak to you more, but unfortunately running out of time. Hold that conversation for another day. With that, take a short break, come back, get you more on the markets and individual stocks on the other side. Stay tuned.